Top 5 ETFs to buy in 2023. In this video, we will talk about the top 5 exchange-traded funds or ETFs for 2023. Stocks can be a bit tricky to deal with, and so we have compiled a list for your convenience. Let's jump right in. But before we continue, I will request you to subscribe to our channel. Subscription helps out our channel, and I appreciate all your support in this regard. 5. Invesco QQQ. Invesco QQQ has an equivalent weighted approach as compared to a market capitalization approach towards investing. This means that this fund allocates the same weightage to all component companies. The usual trend in investment is to accord stocks in a fund based on market capitalization. This gives a pronounced tilt towards smaller cap companies, which have more emphasis on performance and compositions. The Direxion Nasdaq 100 allocates an equal slot of 1% in equal weighting. In the majority of stocks, which make up about 70% of the overall fund, tech companies, consumer discretionary items, as well as healthcare stocks have more presence. Investors who are invested in capturing or investing in every company mentioned in the Nasdaq 100 have to consider investing in the QQQE. 4. Vanguard 500 Index Fund, VOO. VOO has a market capitalization allocation strategy. This ETF tracks most large and mid-sized capitalized companies which are selected by the S&P Committee. The way this ETF captures the market capitalization is quite versatile. Even with a very good spread in terms of tracking its index, there are limitations backed into the VOO. The fund itself functions in a highly competitive environment. But another issue with the VOO is lagging reporting. It discloses its market holdings monthly. Other funds reveal their market holdings almost daily. This ETF does reinvest dividends when paid. VOO does provide quality investment opportunities for all investors. 3. Berkshire Hathaway Inc., Class B, BRKB. Berkshire Hathaway Inc. is one of the most closely observed stock portfolio across the globe. This stock holding is a flagship stock investing company owned by the legendary Warren Buffett. One of the most spectacular things about this company is that it has a huge collection of investments. Even in the recent market decline, Berkshire value is estimated to about $329 billion. This is more than half the size of the conglomerate's market capitalization value. And last but not least, all these investments were selected by Warren Buffett himself. Recently, the company included 2 ETFs in its overall stock investments. These stock investments are relatively minor investments for the investing giant, but these 2 investments are quite unique. The ETFs are the SPDR S&P 500 ETF Trust Fund and the Vanguard S&P 500 ETF. Both of these funds are quite similar and belong in the S&P 500. These funds are delivered to perform long-term dividends. These funds are in relatively low demand since they do not take up a large investment. This makes BRKB a very lucrative opportunity for stock investors willing to invest long-term. 2. SPDR S&P 500 ETF, SPY. SPY dedicates itself to market capitalization strategy through which it only tracks large and medium capitalized stocks by the S&P Committee. SPY is perhaps the oldest U.S.-listed ETF and is also widely known for its greatest trading volume. SPY is known for tracking the S&P 500, which is arguably the most popular U.S. index. The fund chooses 500 securities based on their large market capitalization. However, the SPY does omit some important names. It is also important to remember that SPY is a unit investment trust, which means that SPY must be able to replicate its indexes. This means that the fund cannot reinvest dividends between different portfolios, which will hurt its overall market viability through cash drags when the market is doing well and help it in consolidation when there is a market downturn. 1. Vanguard Total Stock Market Index Fund ETF, VTI. VTI is known for having a market capitalization-based allocation. This means that this fund invests in all U.S. equities markets, which spans all across the entire market capitalization spectrum, regardless of its size. Due to its market capitalization strategy, VTI is an excellent candidate for all-encompassing total market equity exposure. This is also micro-market capitalization investment opportunities, by the way. The fund offers a very neutral coverage and does not tilt heavily towards any industry based on their value or size. It is also important to mention that the fund is passively managed. The fund is also 100% invested. The fund itself has tracked really well with other market indexes such as Dow Jones, MSCI, and CRSP. The only issue with investing in VTI is that its portfolio disclosure is reported monthly and not daily. Due to these lagged holdings, investors may miss out on some lucrative opportunities that arise within that month. This brings us to the end of this video. Please smash the like button if you found the video informative. Thanks for watching till the end. See you in the next one.